Hi everyone, my name is Simon Mishewicz from Optimized Accountants, and in this video we're going to be talking about capital gains tax and the UK update for 2024 and 2025. So let's get into that detail. If you're interested in some of our other channels, then feel free to look at the Moving to Marbella or indeed the Expat International Taxation. And of course, you're watching the UK property tax right now. We have updated the ebook for UK property tax. That's after the autumn budget, so feel free to download that from our website or use a QR code there. So let's look at the capital gains tax rates. So the 2024 autumn budget introduced significant changes to UK capital gains tax rates. Effective from 30th of April 2024, the basic CGT rate increased from 10% to 18%. While the high rate rose from 20% to 24%. These changes align to the CGT rates across assets, including residential property gains. All of a sudden, landlords thought they was being targeted, and yet what they decided to do was the total opposite. It wasn't to penalise landlords at all. The change, which most people were surprised about, was to attack non-residential property investors, whether you own stocks, shares, or commercial property. So it aligns itself now back to what it was. Now, one thing I do want to take you back to is that the 24% was 28%. So investors, residential property investors, that is, did have a drop from 28% to 24%. So that's a good thing, if anything. So let's have a look at 2024, 2025, and we'll look at basic rate taxpayers, high rate taxpayers, and additional rate taxpayers. We all still get £3,000 worth of annual allowances, so that's fine. The rate of tax is 18%. It was 10%, so it's gone up by 8% for basic rate taxpayers. 24% for high rate taxpayers. It was 20%. It was also 28%. So if you had residential property investments, and 24%. So it was 20%, 28%. So everything's pretty much now aligned to 18% or 24%. Whichever tax brackets you are in, that is the tax rate you're going to be charged. Now, think about tax planning. It's always about being proactive and looking forwards as opposed to back. Look at using your annual 3,000 allowance. So if you've got several assets to sell off, maybe you phase it to make best use of your £3,000 annual allowance. Also, husband, wife, civil partners can each use 3K. So could you use a deed of trust to transfer assets between you, and then you sell the asset, which allows you to benefit from those two allowances. And third thing is to look at selling loss-making assets. If you've got a gain, you're going to be paying capital gains tax. Could you sell an asset that's making a loss to negate the profit, with therefore not paying any tax at all? Some things that there's a lot more you can do, but this is just some ideas to help you reduce capital gains tax whenever you're selling assets.